Hey there, Legal Tea listeners. This is your host, Jenny Roselle. Welcome back for another episode today, episode 170. Today is a current trends topic where we talk about things going on currently that are relevant and pertinent to my estate and elder law world, and or maybe they're things I've seen on the news or stumbled across on social media. Well, today's episode is about something called the Corporate Transparency Act that was enacted by Congress in 2021, but it did not go into effect until the beginning of 2024. And it is super important and very timely to have this episode because business owners that had a business before 2024 need to get into compliance by the end of this year. Now, we'll get into more of the details here in a second, but let's talk about the Corporate Transparency Act and something called Beneficial Ownership Information, or sometimes people call it BOI reporting. Now, the Corporate Transparency Act is something that applies to owners of a business like businesses, LLCs, corporations, etc. And there's a list of types of businesses that are exempt from the Corporate Transparency Act. And most on the list are either like one, heavily regulated already. So think of like financial services, banks, etc. Or two are those that are fairly large. And to count as a large business, they have to have more than like 20 full-time employees and have gross receipts and sales in excess of $5 million and also be located in the United States. If you fit that definition of large, you also do not count and the Corporate Transparency Act does not apply to you. Otherwise, if you're not on the short list of exempt organizations like me, and I have 4 businesses, and all 4 the Corporate Transparency Act applies to it. So if you're a business owner, make sure that you not only listen to this episode, but after you listen to it, make sure you seek advice and counsel from an attorney or an accountant, I should say. Alrighty, let's start with what is it? What is the Corporate Transparency Act? So the purpose of it was to create a comprehensive and secure database of who owns business entities with the goal to prevent the use of shell companies, which are being used for money laundering and other bad activities. As I discussed a second ago, it applies to a lot of businesses, but not all. So here's more of a scoop on that front. So they have a term of art called reporting companies. And reporting companies are now required to disclose very specific identification number of its, another term of art, beneficial owners. And they're supposed to disclose this information to the U.S. Department of Treasury's Financial Crimes Enforcement Network, otherwise known as FinCEN. So first, what is a so-called reporting company? Now, a reporting company is a corporation, an LLC, or any other business entity unless your company is considered exempt. Now, there are 23 types of companies that are exempt, so like banks, credit unions, financial services, insurance companies, accounting firms, public utility companies, the large companies that I talked about a second ago. So if your company makes that list of 23, you can totally forget about the Corporate Transparency Act. But if you qualify as a business that must report to the FinCEN of the U.S. Department of Treasury, then the business must submit a report to them with the following information: legal name of the company, any DBAs, doing business as, any DBAs, what state the business got formed in, the address for the primary place of business, the tax ID number, like an EIN, and information for all beneficial owners. Now, that is the other term of art that I referenced like a couple minutes ago. So let's define it. And then talk about how to submit it. So or how to submit the report. Sorry, that was a little clunky. A beneficial owner is someone who owns not less than 25% of an ownership interest of the company, or who exercises substantial control over the entity. So to fit that last qualifier, there are people like senior officers. Man, words are hard today. Senior officers like CEOs, presidents, etc., board members, managers of an LLC, etc. So when the business goes to report, they must disclose the following information for each beneficial owner: legal name, date of birth, address, identification number from like a driver's license or passport, and also submit a scanned image of the driver's license or passport. So that's a little bit of like who it qualifies and how to kind of get things rolling. So let's shift to when does all of this start? Well, it's going on right now, my friends. Let's give more teeth to that though. This law became effective January 1st, 2024. Though from there, it depends on when the business was created as to when you need to submit that information that I was just blabbing about to the U.S. Department of Treasury. So if the business was in existence before January 1st, 2024, the business has the entire calendar year of 2024 to do their initial report filing. Though, if the business is created after January 1st, 2024, you are to submit a report to the U.S. Department of Treasury within 90 days of forming the business. And then, starting in 2025, if businesses are started after January 1st, 2025, they will have 30 days, I think it used to be 90 days, to submit a report to the U.S. Department of Treasury. So all of those are super important dates and things to know if you have a business, my friends. If you have a family member or friend that has a business or recently started a business or about to start a business, pass this episode along to them. This is such important information, and I fear that not many people know about it. And the end of the year is fast approaching. So, on that note, we should talk about what happens if the business does not comply with the Corporate Transparency Act rules. Well, if a business willfully provides false or fraudulent information to the U.S. Department of Treasury, or if there is a total failure to submit a report in compliance with all these rules, there are some very serious penalties and fines. According to FinCEN, there could be a fine of up to $500 each day the violation continues, and up to $10,000 fine and possible 2 years imprisonment. So, yeah, those are really harsh consequences. Now, if I had to guess, they are probably reserving that latter stuff like imprisonment for people that are willfully providing inaccurate false information, like straight up lying and fraud, I can't see them throwing someone in prison for 2 years, like a mom and pop shop who just didn't even know about this change in the law. But this is this was the first year. It's new to me as basically as it is to you. So maybe I'm wrong in thinking the government is not going to be that harsh and mean. I don't know of anyone that they've, cracked down on. But anyway, so where do we stand today? If you are a devoted Legal Tea listener, you may remember me doing an episode on the Corporate Transparency Act in January of 2024. Well, a lot has happened since then, which honestly no one should be surprised about. The biggest thing to update you on is that it actually got court tested, specifically in Alabama. And essentially, in the most long story short ever, an Alabama federal district court ruled the Corporate Transparency Act as unconstitutional, but only to the plaintiffs in the case. After the case, the government has made it quite clear that they expect everyone else to comply with the Corporate Transparency Act's rules. So I mentioned this update because there are a lot of people out there that saw this headline but didn't read any further, and they think that it's unconstitutional, but the act is very much still alive and applicable to most business owners. An article on Gibson Dunn, which is linked in the source links for this episode, they stated, Quote, ultimately, the issue would likely not be resolved nationwide without Supreme Court review or review in each of the other federal courts of appeals, action from Congress, or the government in the Northern District of Alabama's decision, like the government basically saying like, hey, this is me, this is not quoting them, but this is me saying like, hey, the government saying, hey, we're going to trust that decision that happened in the Northern District of Alabama to be countrywide. Okay, back to the quote. And then it says, it may be several years before the federal judiciary provides a definitive answer, end quote. So beyond the Alabama case, there have been some other states that have made similar attempts. And now, more currently, there are groups trying to claim to be exempt, like groups like community associations, like homeowners associations, property owners associations, etc. So we will have to see how courts continue to deal with all of this, especially as we get closer and closer to the end of 2024 deadline that is hovering over us like a dark, dark cloud. So a few final thoughts. I think that's all I'm about to share right now about the Corporate Transparency Act. I think it's enough to encourage anyone that has an existing business or that will be starting a business to make sure that the Corporate Transparency Act's rules are incorporated into your setup or into your management appropriately. Honestly, this is probably kind of a classic example of ensuring that you are maintaining a relationship with professionals in your life, like your estate attorney or your accountant or financial advisor, or at the very least, making sure you are making intentional time to learn, whether it's through podcasts or magazines or newspapers, whatever your cup of tea is. And I say this because can you imagine all the people that have absolutely no idea that this one got passed, 2 is now in effect in 2024, and 3 that they are supposed to get into compliance by specific deadlines? That's really scary to think about, right? And I'll be curious to see how the government handles the many, 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 many business owners who do not comply, whether intentionally or not. So it will be very interesting. Alrighty, let's wrap this episode up. Next week, we're back to the celebrity estate planning type of episode. And during that episode, we're going to dive into what happened estate-wise following the passing of John Dorrance, which you may be thinking, who in the world is that? Or at least most of you may be thinking that. Well, one day when you need to know who the founder of Campbell's Soup is, it's him, John Dorrance. So that's next week is on him and his estate. So be sure to tune in for that. Alrighty, Legal Tea listeners, talk to you then and stay well.